Good morning, folks. I hope everyone out there is having a good week so far. Happy Taco Tuesday to those who celebrate. We're getting the stream underway here. It should be a pretty fun episode for this week. Got a market that seems primed to move higher, and we'll talk about that in just a moment here. All right. So first, let's quickly get through the disclosure. Don't risk more than you're willing to lose. That is the real core basic modus operandi of traders, if you will. You really have to treat this like a business. And I know I say this every week, but I say it every week because I see people continuing to get hurt, risking more money than they want to put at risk, and only realizing that after the fact, after they're already in the trade, and then they're not able to sleep or they're not able to function properly without constantly looking at the market. If that sounds like you might have too much on at risk. On the other side of it, there's another extreme, which is not having enough on. And I know that might sound strange given what I just said, but the reality is that's another kind of analog. That is to say, if you don't have enough exposure on, you might just not even care about the trade. You might not want to manage it. You might not think it's enough money that it's worth your time or attention, or it doesn't drive any kind of focus to the trade. So just think about it from that context. You want to find your sweet spot. For me, it's not putting on more than 1% of total portfolio liquidity into a situation where that might create risk. Now, a little bit about me here. My trading journey began in 2005. Been doing this for a little while. It's been a lot of fun. And I've learned a lot about myself. That's one thing about trading that you can count on. It's going to teach you a lot more about yourself than you might count on. That's because you're going to be put to situations where you have to make rapid fire decisions, where you have to examine whether or not your decisions are being influenced by primal emotions like greed or fear, and whether or not that's going to get you in trouble. The biggest thing to remember is you want to be able to keep your doors open. You treat your trading like a business, buying and selling inventory. That's what we're doing, whether it's shares, futures, options, commodities, bonds, whatever. We're buying and selling inventory, and the goal is to capture a positive spread. That meaning we're making profitable trades more often than we're not. And at the very least, we want to have liquidity to come back tomorrow, next week, next month, next year to keep that business running. So treat your trading like a business, give it the respect it deserves. My rule of thumb is not putting more than 1% of total portfolio liquidity at risk in any individual trade. So let's talk about the weekly pivots here. We're in bullish territory for now. We're above both of these pivot levels. And these are levels that I would watch pretty closely. If we get below them, particularly on a closing basis, it opens up the door to wanting to put on some hedges, maybe look for some shorts in areas where there's relative weakness in the market. That doesn't mean just go out there and try to fade everything you can, but there are areas you can find where they're below key moving averages or they're showing weakness versus the broader market. You could do an easy ratio chart on stock charts to see something like that. Say, you know, right now you might find that there are certain components of tech that are underperforming the broader market, that there's been a sort of washout in some of the semiconductors like AMD. So just look at what's going on around you opportunistically, but for now, still in bullish territory, still seeing opportunities for further upside in this market. And we still have a pretty big area above us of exposure at 6,500 SPX. That's where there is a call wall. We're trading below it this morning, and we're actually seeing a pretty big push lower here as I'm speaking. So we'll get into that in just a minute. But overall, what I'm seeing in the market is a market that seems like the path of least resistance is higher from here. Now let's quickly talk about some exclusive deals. If you'd like to check out Bookmap, you could do so. You get up to 40% off your first billing period visiting traderead.com/bookmap and scrolling down to the special offers. It's a pretty sweet deal. And then the folks at Bookmap would love for you to share a picture of your trading companion. That's right, hashtag BookmapPets. You could share this on Twitter, Instagram, and get a chance of 1 month free of Global Plus, as well as to be featured on Bookmap's Discord and in the calendar, which you would get a copy of if you win the contest. So that's kind of cool, right? All right, so let's shift over to Bookmap here. And we can see that selling pressure that was coming in really just about 5 minutes ago. We started to see the selling. It got a little bit more aggressive. Let's zoom out so we can see where we were. We've taken out the overnight lows here on this move. And we can see that it was reasonably aggressive volume, and that's delta volume. So that's just showing you another illustration of aggression by sellers here in this move lower. We're going to zoom in just a little bit more. And you could see in this move, there was actually a large passive iceberg sale pre-market to see 736 on the sell side is noteworthy. Looking through the headlines, don't see a lot that would suggest there was a reason behind this move. We got Redbook. It came in pretty good earlier. Johnson Redbook year over year actual came in at 6.6% versus a prior reading of 6.5%. So that means in aggregate, in nominal, non-inflation adjusted terms, consumer spending continues to rise. We know it's pretty concentrated. We know it's largely the top consumers that are making up most of the spend. So I believe it's something like the top 10% of consumers are making up about 50% of consumption trends. Good morning out there to Tom. Thanks for tuning in. And good morning to everyone else that's tuned in today too. Seeing a little bit of a reversal off that low and right near the put wall level. This is a level in SPX where we did see a lot of put activity, a lot of puts being opened even into yesterday's trading, particularly in the PM session. So that's offering some support on that downward move, at least so far. And you can see the subchart here. This is showing us in net terms the amount of iceberg selling that's going on. There is some more selling happening with these passive sales, and it really started as this move was underway, that you saw some larger desks actually selling into that. And that's noteworthy. Often is the case, you see them taking the other side of that trade, where there's a big move lower. They might be nibbling passively. Perhaps they're covering shorts or maybe even building longs opportunistically. Instead, in this move lower, we actually saw more distributive pressure. Now, folks, as I'm presenting here, if you have any questions, you're welcome to ask them anytime in the chat. I am streaming to several sources, so I'll get to your questions as soon as I see them. Let's quickly check in on some of the more granular levels that we have here. The pivot that I want to watch today is 6508.25. That's 6508.25. And there's a couple reasons for it. But one, as you may know if you've watched my streams, I like confluence. And when we see a pivot level that is ostensibly created from volume, price action, and other analysis, showing confluence with the key one negative level, that gives me a sense that this is an important level. So far, it had been support overnight until recently. We had that test lower to the put wall. It held. We are seeing some signs on the oscillator subchart here that this downward move might be getting a little bit extended. So we'll see if we end up getting some support here. We do have a pretty light economic calendar today. Really, the only thing we're watching now is going to be 10 a.m. U.S. quarterly employment and wages for Q1. There's also the Apple event coming up at 1 p.m. Eastern. And every time Apple has this event, I do have to put out a tweet that lightly kind of pokes fun a little bit. It's all in good spirit, but you can find that on my X if you're interested. And so far, just sort of hovering around key one. So let's get back into Bookmap. We could see the volume, the level of interest in buying and selling has just dropped off. It's really quite light here after that larger move, which now we're starting to see potentially a reason for it. Just seeing a headline cross here, Israeli Army Radio. Israel tried to attack Hamas officials in Qatar. That's coming through at 9:10 a.m., probably around the time that this move happened. Let's take a look at the NASDAQ as well. Very similar move in the NASDAQ around the same time, presumably. Again, from that headline, Israeli Army Radio saying Israel tried to attack Hamas officials in Qatar. We also see a large offer appearing overhead in the NASDAQ futures. 380 for the NASDAQ is pretty chunky, and that's just around the Gamma 1 level. So that is a pretty magnetic level for price to be drawn back to. So we'll watch that for a moment, see if we get a little bit of a push here to fill that. Really don't want to keep that guy waiting for too long. NASDAQ continuing to look a bit heavy here. Got about 14 minutes ahead of the open. And we do have a 3-year note auction coming up just around the time the Apple event. We'll get results just after 1 p.m. Eastern. After the bell, we also have Oracle earnings, which should be a pretty interesting look at their part of the cloud space and how much AI related demand they're continuing to see. The AI narrative a bit challenged here as we continue to hear stories like 95% of companies having invested in generative AI have nothing to really show for it. And then recently, a US Census survey showing that large enterprises are actually decreasing their overall investment in AI. That is to say, the rate at which they're investing is falling. Now, I'm an avid fan of technology. I do experiment with AI. I have a couple of different, I would say, platforms I've put together, and the results vary. It's really good at some things and it's not so good at others, particularly when it comes to asking very specific information that it can't go out on the web and search for, that it has to search within its model to find. So I got a question in the chat, how to get Bookmap. I'm going to send a message back, but it's pretty easy to get Bookmap. You can also benefit from our exclusive partnership with them. Visit traderaid.com/bookmap. That's traderaid.com/bookmap. And you can scroll down to the special offers to get up to 40% off your first billing period. See how Bitcoin is doing this morning too. And look at the overnight session. Looks like I'll have to backfill here. And while that's pulling data, let's also take a look at one other area of interest, and that is going to be the pre-market heat map. What's going on with the S&P ahead of the open? Not too much so far, pretty slow pre-market heat map, but you are seeing United Health bid up 4.2%, CVS bid up 2.5%. So there is some strength in the healthcare sector. You're also seeing Broadcom continuing this pretty incredible rally, up another almost 1% pre-market, and Oracle ahead of its earnings tonight, up 1.3%. Let's also take a look at the futures heat map here. Crude oil has a bid ahead of the trading day here, coming off its lows, but still the overall trend structure of the crude chart is pretty weak. Gasoline bid, cocoa bid, the Nikkei last night falling. European stocks under some modest pressure today. And gold and silver sort of consolidating here, but I think it's a no-brainer that gold's going to hit $4,000 an ounce this year. I think it's very likely that silver hits $48 an ounce. That one might take a little longer, but I still think it's in the cards maybe early next year that we see that pricing. That would take us back to the 2011 highs in silver. So unlike gold, silver has still not made a new all-time high. Back in 2011, I think gold was trading around $1,900 an ounce when silver was trading 48. Now it's trading 3,700 practically, as silver trades around 40, 41 and change. So silver has some room to catch up for a number of different reasons, but I think one big reason is that it is seen as an alternative to gold, a cheaper alternative, particularly with gold has had a run this big. It's almost inevitable that silver to some degree catches up, and then eventually, especially if industrial demand picks up, that it surpasses gold in terms of its gains. Now let's see if we got that backfill. We did. So here's Bitcoin overnight. Got a pop really towards the beginning of the European session. And then we've just consolidated and felt a little bit heavy from there. But overall, I think Bitcoin, like gold and silver, might have some room higher here. A lot of this has to do with US policy, whether intentional or not, is likely to further weaken the dollar over time. Deficit spending, cutting interest rates, and some of the ideas of trying to create an export powerhouse in the US would require a lower dollar, and the former two would encourage a lower dollar, that high deficit and lowering interest rates. So anything that's sort of trading counter to the dollar should benefit from that, including gold, silver, and Bitcoin, but also including stocks, particularly those with exposure to foreign earnings. Move back to the S&P futures as we approach the market open. And we'll put it a 15-minute time slice here. You can see we're just pinging around that pivot level we talked about, 6508.25. So that move we had earlier, we talked about that at the start of the session. We had that big move down. We had a bounce off that move on slightly lower volume. That's the delta on the buy side. And now we're continuing to roll lower. It looks all but inevitable that we're going to test that put wall during regular trading. Now, for the intraday pivot, I'm looking at 6508.25. So again, I'm more inclined to look for intraday fades below this level, which we are now. And if we break below that put wall, it certainly suggests we have more room lower here. That could even, if we get a decent motivated sell, take us back to our weekly pivot. Let's take a look at the same for the NASDAQ. You can see the NASDAQ's intraday pivot, 23,825.75. That's 23,825.75. And we do have some fair value bearish signals coming into the NASDAQ as it breaks below that pivot. Often those give us a sense that we could see some continuation. Now, one thing I'm really going to look for today to give me a sense as to whether I want to trade this tape, because yesterday was honestly quite boring for much of the day. I went outside and touched grass, enjoyed some nature. It was a beautiful day. So I'm hoping today gives us a little more. And the first thing that I like to look at to get a sense as to whether we're going to get that potential for range expansion, or at least a relatively dynamic trading day, is the 20-minute opening range. Yesterday's 20-minute opening range was just shy of 10 handles. To me, that's boring. And that opening range was a very helpful clue that the trading day that followed could also be quite boring. And for much of it, it really did feel like paint drying until we got to the afternoon. It got a little spicier, but overall, that opening range is a really good way to gauge how much volatility we can reasonably expect. Obviously, it can't factor for things like what if we get a really bad data print, or what if Trump, goes out there and says something that really catalyzes a bigger market move. But what it can give us a sense of is all other things not really considered the sort of exogenous event volatility catalysts, the market doing what the market's going to do. If in that first 20 minutes you only get a 10 handle range, likely to be kind of boring. So that can be a good time saver, because remember, as traders, we're not just putting our money at risk. We're also investing our time and mental capital. If you come in and you see a 10 handle or less range on the S&P futures, might be a good time to say, you know what? I'm going to do something else rather than be glued to this tape for now. We got just about 3.5 minutes until the market open here. So I'm asked, what commodities or stocks do you think are the best today? Trade that include best volatility and trends, moves, and that respect your support resistance. I don't know that I have a top five off the top of my head, but I do like CrowdStrike as a swing. My partner shared that on Fox Business yesterday, and we shared that with Trader Aid members last week. It's bouncing off the 200-day moving average, and I think it's got some room to the upside from here. I like gold and silver. I've been adamant about that since gold was well below. I think it was like when gold was in the early 2000s, I started to get extraordinarily bullish about a continuation move. I'm still very bullish on gold. I think it could consolidate a bit, but I do believe gold and silver are on their way higher. Gold to 4,000, silver to $48 an ounce. I think crude oil is overall a fade. Anytime it gets up to the 200-week moving average, it seems to reject there. That would take it to about $79 a barrel. But I think that overall the trend structure in crude suggests that it could be faded on pops. And overall, there's not much to dislike about the S&P 500 high dividend ETF. That's SPHD. Right now, I'm running it in a pair trade versus SPHB. That's the high beta ETF. So it's equal weight long SPHD, short SPHB. And the reason for that trade is I do see a rotation into dividend paying stocks and away from some of the high beta stuff. It's been underway for some time. This trade still sort of basing, waiting to take off. But I think that is something we could see this month, particularly with September seasonality being somewhat challenging. So for day trading, I've provided my pivots for the S&P 500 and the NASDAQ, bullish above, bearish below both those levels. We can go over them again really quickly here. For the NASDAQ, the bullish above, bearish below level is 23,825.75. That's 23,825.75. And for the S&P 500, that's 6508.25. So those are the levels I'd be watching in both S&P and NASDAQ futures. I'm also watching the 20-minute opening range. And of course, I'm watching my favorite indicator you all know, the S&P options visualizer. This is a tool that I built that examines the entire options chain of the S&P 500, going through about 10,000 different contracts to find where there are key levels, and it also examines the flow as it develops throughout the day. So in terms of my favorite indicators, I would say the S&P options visualizer is really high up on that list. I believe it's number one because it's been so helpful in finding both where the trend could go, but also where there are key levels of support and resistance to map out. Similar with the NASDAQ, I have the NDX options visualizer, which provides the same sort of information. In fact, I've extended that out to popular stocks as well and ETFs. So we've got NVIDIA, Microsoft, Google, Tesla, and of course, SPY, QQQ, IWM, and so forth. Then I also like the pivots, and this is all in response to a question of what indicators do I like or use. These are my dynamic pivots that I use to map out key levels in various instruments. I focus on the futures market, but these could be applied technically to pretty much anything that trades and has enough volume and price action. So again, With the NASDAQ, we are climbing above our daily pivot as we are with the S&P futures. The NASDAQ pivot 23,825.75 starting to get a bit of an impression here that buyers are somewhat determined. We saw right ahead of the opening bell, there was some pretty determined buying. Now at the open, just in the first 2 minutes, we're seeing some continuation of that. Let's take a look at this through Bookmap. Can better visualize the aggression. In Bookmap, I really love the heat map. Being able to visualize where there's interest in liquidity being transacted is extraordinarily helpful. I know we can do similar in the DOM, but what I like about the Bookmap way of displaying it is that you're able to see past and present rather than just what's right there. So we can see just prior to open, there was a 1,000 lot offer on the NASDAQ that was then moved up. And now let's see if it's still there on the books. And now it seems to be, well, it briefly moved quite a bit higher to 24,000. Let's zoom out even more. It's pretty much gone. But seeing that shows you there is someone out there with interest in higher prices that flashed those signals. And they are back. They're back at 23,875. Just came back on the book very recently. And you can see that in the history. You can see that sort of stair-step pattern too, walking higher. That's usually bullish to see really large offers overhead stepping higher. But what really you have to pay attention to is the price reaction. Do we get up there, fill it, and keep going, showing that buyers have plenty of demand? Or do we get up there, hesitate, reject, and move lower and reverse? The reaction to the liquidity is really important as well, which is another reason seeing it on a historic basis can be helpful, because you can see what those prior reactions looked like as well. Another thing I like about the Bookmap interface is being able to see icebergs and stops. That MBO data package is quite handy because pretty much for every other type of charting package I've seen, icebergs are inferred by large shelves on the volume profile, which, by the way, may have nothing at all to do with icebergs. Icebergs are simply an order type where you're attempting to hide the size of your order. So, for example, if I needed to move 10,000 contracts of S&P 500 futures, I might decide that I want to use a 500 lot iceberg so as not to show that total hand and do that in 20 cycles. When that first order is filled, that means that I'll be kicked to the back of the order queue, but it also means the market doesn't know I still have 9,500 contracts to move, and thus it may have a different reaction function to that supply. Speaking of supply, overhead, we can see a new offer emerging on the S&P 500, 676 contracts at 614, just moving down now to 6513. So overall, this open is constructive. And we're starting to see some signs of potential continuation here. We're going to switch views real quick. I'll show you that earlier we talked about the downside looking a little extended. We saw that from the momentum oscillator. And we broke above that intraday pivot on the NASDAQ. So far that's starting to look good. We're testing the BGL and the Gamma 1 level. That Gamma 1 level can be pretty magnetic, so we could get stuck here and consolidate for a little bit. On the S&P 500, we have held above the put wall. We are testing the BGL, and we've broken above key 1 negative here. So that is creating some positive hedging pressure. We also see potentially a positive fair value signal starting to form here. We'll see how this candle closes. Obviously, it needs to move above the last candle for that signal to be valid. That's where it will print. But the S&P also showed a little bit of extended downside on that move lower. So overall, starting to look a little bit more constructive as we start the day here. And like the NASDAQ, the S&P has this large offer. We can see it on the NASDAQ overhead here. We can see it on the S&P 500 futures here as well. So there is interest in higher prices. And just another update on that headline we got earlier. Israel claims America gave their military full cover to attack Hamas in Qatar. U.S. was notified before the leaders were struck. And Israeli Channel 12, citing an Israeli official, Trump gave the green light for an attack on Hamas leadership in Qatar. We're now getting closer to that offer, which has confluence with Key 5. And again, from auction theory, really want to see robust demand, which means we don't necessarily have to take it out in the first test, but I don't want to see a violent rejection. I want to see a concerted push, maybe some consolidation, but ultimately taking out that level with continuation. That'll give me a sense that buyers have the demand to take out the supply. Similar picture in the NASDAQ, and we can see offers stacking a bit in the NASDAQ as well. For the NASDAQ, these are really large offers. 419, 997. I mean, that's size in this contract where right now the order book depth is just 8.2 thousand. So you can see over 10% of the order book in a single order. And we did get right up to Key 5 and that large offer zone. We are seeing some sellers get a little more motivated up there trying to defend that confluence area. But look at this. You see buyers coming in with almost 1,500 on the buy side, absorbing that selling pressure with icebergs. So remember earlier, they were selling into some of that pressure when we got that news. That downward move, I'm attributing it to what happened with Israel and Qatar because the timing is very, very close. Now we're seeing the opposite on this attempt by sellers to pull us lower. Buyers are getting a little bit more aggressive. The passive buyers coming in and scooping up some of that supply. So even though we did get an initial rejection here at that supply zone, let's see if we're able to consolidate and make another attempt. The iceberg buyers kind of suggest that to be the case, that there are other folks looking at this level wanting to push through it. Now, what would have me concerned about this is if we do start to push below the point of control, retest those lows, that would look a lot less likely that we're going to take out that supply level near term. Point of control for those watching is this yellow line right here. And for those not familiar, that is the area where the most volume has transacted over the session. I'm asked, do I have any secrets or tips on how to identify absorption or spoofing or rejection in the heat map? So I've built tools for exhaustion and absorption that I share on our Discord streams with Trader Aid members that identify those with both visual and audio alerts. In terms of spoofing, it's kind of just a visual cue, and I'll get back to that in a moment. I just want to also update here. We are seeing a test of that point of control. Initially, we're seeing a bounce off of it. Let's watch that closely for the S&P. But for spoofing, I mean, you could probably say some of this looks a little spoofy here when you're putting in an order and then running away, putting in an order and then running away before it's filled. That to me looks like spoofing, and the heat map makes it pretty clear. Now, that doesn't mean they don't have any intent to later be filled, but for now, we saw those orders come through, step up without any fills. So, it looks a little spoofy to me overall. Still means there's interest in higher prices, but the way they're behaving is just a little bit weird to flash that much size on the NASDAQ and then just run away. But in terms of absorption and exhaustion, I built indicators to demonstrate that from a data-driven approach because, quite frankly, they are important to be able to see where there's aggressive absorption, where it's like unusually large on one side of the tape or another. That can give you a sense that you might be nearing a reversal. Same with an exhaustion print. We haven't seen any of those of yet in today's tape, but I think we may have seen some. Yeah, we saw a little bit in Bitcoin. We saw some seller exhaustion earlier and even some buyer exhaustion earlier as well. You can see the Nasdaq's own point of control quite a bit lower than that of the S&P. Earlier, it did hold. That was pre-market, but we are seeing some more aggressive sellers starting to come in, and we have seen a new regular trading hours low print in the Nasdaq. S&P so far holding its point of control, showing maybe a little bit of relative strength versus the Nasdaq so far, which quite frankly has been a bit of a trend. And to explain why that's happening, let's just take a quick look at the S&P 500 heat map. So you can see right here, it's a pretty rotational type of day. You've got some selling out of industrials, real estate. You've got a lot of strength coming into energy. Financials are well bid. So overall, it looks like it could be a day where it's a kind of a narrow market. If we look at the stats right now, there's only 38.7% advancers versus 56.2% decliners. So that's also giving you a sense it's a market where strength is very selective underneath the surface. Some of the more cyclical components in industrials really getting hammered today. And S&P futures testing that point of control for a third time. The more we test that level, the more likely it is to give way. And if we zoom out a little bit here, we can see earlier in the session, we came down to this put wall area. We held it. That's an area of support I believe deserves to be watched pretty closely here. And just going back to the pivots here, we can see we are just balancing around that intraday pivot on the S&P and on the NASDAQ. NASDAQ so far starting to look a little bit better, even though it did make a lower low. The way it's recovered off of that and is now starting to try to build into Gamma 1 and potentially break above is looking constructive. Let's keep an eye here. What I'd like to see for the NASDAQ is it break above Gamma 1 and build acceptance for at least one 5-minute candle. That means holding above Gamma 1 for one 5-minute candle. The reason that this level is sticky is this is an area where there's both a lot of calls and puts on NDX. And that creates a sort of magnetic influence that can draw price into a level like this and create some volatile consolidation like we've seen since the market opened. This is one reason having those options levels as an overlay on your charts can be pretty helpful. And when we're looking at the S&P 500, we can see similar with key 1 negative. There is some consolidation happening around this level, which also has confluence with the pivot we talked about earlier. Now, if we zoom out a bit, we could see this is still structurally a healthy uptrend, but we've seen a lot of narrowing of the trading range. These are all daily candles. And overall, that trading range, especially in the last 4 or 5 candles, has been really narrow. We have held above that key weekly pivot, that 6441.25. So that leads me to be a little bit more bullish on a swing time frame. But remember, intraday, we are watching 6508.25 on the S&P and 23,825.75 on the NASDAQ. So these pivots help to keep us a little bit more honest, giving us a line in the sand where we can be bullish above and bearish below. And we're just about a minute and a half from forming that 20-minute opening range, which will give us a little bit of a sense as to whether or not this is going to be an interesting trading day or not. So far, that range is really narrow. Just shy of 8 handles on the S&P, which is less inspiring than yesterday's opening range. What that may end up being is without an exogenous catalyst, let's say like the 10 a.m. data being an outlier, or something really exciting happening at the Apple event, or the 3-year note auction either tailing or stopping through more aggressively than we would expect. Without some kind of outlier, this may end up being a kind of boring trading day. And again, I told y'all why I looked at the opening range yesterday and what conclusion I drew. This is an even less inspiring opening range today so far. We've got 30 seconds left to finish that, building that 20-minute opening range. So if your time is important to you as a trader, looking at things like this to get a sense as to whether it's worth watching the whole day is really important. So I've been asked, where can people find my indicators? You can find them at traderaid.com. They're all on our Discord for members in our streams. You can also find the SPX options visualizer for Bookmap and MotiveWave available to subscribe to at traderaid.com/SPX. There's a couple of other questions in here. What time frames do I look back at and do I think are most important? I like to look at all the way back to monthly, weekly, daily. Those are the key time frames I look at for swing trades. And then intraday, I think it's important to look at your 5s, your 15s, and your hourlies. Brendan asks, how do you use the iceberg indicator daily? Brendan, could you give me a little bit more color on that question? I mean, for me, I'm simply firing it up and watching how the S&P trades, and then if I need to zoom out, I can zoom out more on that data for when I had, Bookmap running to be able to see the accumulation or distribution of those icebergs. Like right now, we're in positive 1600. So that tells you that right now, net, there's iceberg buying. There's more buying than selling. Now, it's still a pretty gross looking tape. And what I mean by that is we haven't been able to hold the point of control. We talked about the more you knock on it, the more likely it is you break it. So we did break it. We're testing back above it, but it's starting to look a little bit weaker here. Let's take a look at the options flow. Options flow is balanced. You have the hot call trading 2,000 volume, the hot put trading 2,000 volume. So pretty much balanced in SPX options flow so far. Got about 7.5 minutes left on the stream. If you guys have any questions or feedback or anything, let me know in the chat. We're out here on Twitter, YouTube, Substack, and Discord streaming live, and also apparently on Kick and Twitch as well. Kind of just everywhere we can stream. And for folks that are just catching up, we did have some geopolitical escalation pre-market. Israel attacked Hamas officials in Qatar. Apparently, this was given the green light by the Trump administration. And that accounted for a little bit of the move we saw earlier, where we saw that dip pre-market. Now we're just exploring that range we've carved out. There really hasn't been anything too exciting happening here. We did see that offer overhead. We did see a rejection of that offer. We did push below the point of control. So it looks like a pretty clear rejection of the supply overhead, despite a large amount of iceberg absorption. We also had a really uninspiring 20-minute opening range. This is maybe like an 8 handle opening range. Not exactly the stuff that you want to trade on. It's not really setting up to be a very exciting day. So, in the interest of full disclosure, I probably won't be trading this tape much today because the opening range, like yesterday, is giving me signs that there's not a lot of room for range expansion. Similar options are giving us a similar kind of sign here. There's just not a lot of interest in a large distribution of strikes. And we can see price pulling below my intraday pivot, so I'd be more inclined to look for fades here. Opportunities to reoffer and look for price to come lower. You can see the NASDAQ also grinding to new intraday lows here. So a similar look, now testing its respective point of control, which earlier pre-market was support. We'll see if it holds. But I'd say net, this is potentially going to be a somewhat slow day. The big question is, what do we get from the 10 a.m. data? And I will stick around for that print and the price reaction for just a few minutes after that 10 a.m. spot to see if we get any more range expansion and directionality from that print. Remember, after that, we get a White House press briefing. Oh boy, the Apple event and the 3-year note auction all at 1 p.m. Let's just go back to another view of this price action. Interesting how we just keep rebalancing around that daily pivot, isn't it? It's almost as if the market is looking at our levels too. And I say that half in jest, but these levels are actually built by market generated information. So, of course, other market participants are going to see similar, which is what makes them actionable. So looking at this chart of the NASDAQ futures, we can see we've broken below the big green line. That is a 21 period EMA on a 5-minute chart. That's bearish for momentum. We are starting to test that pivot to the downside. We'll see if we break below it and build some acceptance. But overall, the NASDAQ chart looking kind of heavy here. Similar look with the S&P. What I'd love to see, the contrarian in me would love to see a violent bottom here. That is to say, we see buyers just come in and smash the buy and bring us above these pivots and BGLs without an opportunity for sellers to cover and profit. So they're motivated to buy back in, cover their shorts at higher levels. That would be my bullish dream scenario. And it would probably happen if that 10 a.m. data had some kind of positive surprise in it. But we'll see what actually happens. 10 a.m. data is imminent. It's coming in just under 2 minutes. And we'll carry it live here. One minute left here. Before we get U.S. quarterly employment and wages data for Q1, as well as BLS benchmark revisions. The market watching both data points with a great deal of interest as we've seen signs that the labor market has been weaker than what has been shared with us from data for, well, years. But this will be looking back at a shorter time frame. Nevertheless, it does appear the Fed is likely to get the cover for a rate cut this month, given how weak the labor market looks. You can see the order book lightening up here ahead of the data release. This is often the case, and why I recommend caution ahead of trading events. Subtracting 911,000 jobs minus 911,000 jobs for non-farm payrolls for 2025. This was a downward revision that is pretty aggressive, and it certainly gives the Fed cover for resuming their rate cuts. Whether or not it's actually justified or not is a whole other conversation. This is what Powell, in part, will cite when he comes out and discusses the Federal Reserve's policy shift towards cutting. He's going to cite concerns about weakness in the labor market, and he will claim that they will have a close eye on inflation. So that means that is decreasing employment in aggregate by 991,000 jobs, or about 0.6%. So this would be essentially a decrease in labor participation, potentially an increase in unemployment, depending on whether those non-counted people are receiving unemployment benefits. Gold is rising on this. Dollar is falling. So overall, this is good for the gold trade. It's good for the silver trade. Let's see what's going on with Bitcoin. Bitcoin not really reacting too much to this information yet, but I would imagine overall it should be constructive to it. But really, I'm looking at gold and silver as my favorite ways to hedge against policy uncertainty. And I think that the price reaction we're seeing here helps to solidify that. So I want to thank everyone for tuning in to this week's episode of Back to the Futures. And one last bit, STT Voyager said this is really helpful. Thank you. Thank you, STT. Really appreciate that. Got another comment from Dvorak saying, gotta say I missed the Trump White House events from season 1, not liking season 2. That's pretty funny. All right, I appreciate you all for tuning in. Had a lot of fun today. As always, catch me next week, Tuesday at 9 a.m. Eastern for next week's episode of Back to the Futures. And if you want to learn more about my work, visit traderaid.com. Thank you, everyone.